Welcome everybody to OBIC's Open Banking Insight Series. I'm your host, Michelle Beyo, CEO and founder of Finavator, as well as an OBIC board member. I'm really excited to be here today to present to you our Open Banking Insight Series, and today's episode largely focused on lending, and lending from the lens of fintechs, both in Canada and the UK, as well as both of them being seed stage. And we really want to take today to talk about what open banking has meant in the UK for seed stage and lending organizations, as well as what it could mean for Canadians, especially considering that we have COVID to recover from, and lending is such an extremely important industry at the moment. So I'd like to start today by introducing our distinguished panelists and moderators. So as we look at the series, we're very honored to have Senator Colin Deacon, an independent senator from Nova Scotia, as our series moderator. Also very excited to have a fellow Canadian, Keren Moynihan, who is also a Women in Payments award winner. She is a two-time founder as well as a former banker. Keren is the CEO of Boss Insights, a very innovative fintech company that is offering business data as a service. Boss Insights provides easy access to real-time accounting, commercial, and business data, which is bridging the gap between lending and business customers. Keren has 15 years of experience in financial services as a banker, an advisor, and is a Commonwealth Women Invest Advisory Council member. She is also an award winner of the Unicorn Challenge at Women in Payments in 2020 and a 2019 Executive Leader in Lending. Welcome, Keren. Last but not least, our UK representative in the lending industry, we have Simon Cureton, who is the CEO of Funding Options. Simon is an expert in alternative financial lending. He has been one of the founding members of SME Loans. Prior to starting SME, Simon worked at RBS International, and his global experience spans across many different financial institutions, including Morgan Stanley, Biscayne Capital, Commonwealth Bank of Australia, as well as Deutsche Bank. Very happy to have you here, Simon.
Thank you very much. Really happy to be here.
Yeah, so I'd really like to start today by having Senator Deacon share his thoughts on the importance of seed stage organizations, as well as get us started through this discussion.
Thanks very much, Michelle. And I just start by saying that everything begins as an idea, but turning an idea into a business is a big job. You've got to start to figure out what is it that you do, what problem do you solve, for whom? How do you partner with somebody to start to build a customer base so you can even deliver that value? Those sorts of questions are actually more important than often the technology itself. Technology you can build and you can have a lot of control over what you're building. But actually, you've got to look to customers to figure out how do you build a business model that delivers enough value to customers to also sustain a new type of business, right? A new entrant into a marketplace. You've got to figure out how to manage all those risks that a new entrant faces when they move into a marketplace, and build partnerships to allow you to grow. So to me, this is where it all begins. This is where turning that idea into an actual investable business is really challenging. I've done it a few times. I've got some scars to show for it. And I've got a lot of respect for the courage it takes, and also an appreciation that most people have done it, don't do it again because it's really hard. So we got to cherish our serial entrepreneurs, the ones who do it again and again and again, because they're the ones that keep building our economy. So that's, from a background, that's really where I start. And I'm really interested in this particular area because both of our guests here come from the banking world originally, and are looking at using that experience in a way to find alternative data that allows people to get access to loans that they might not otherwise traditionally get access to. And we certainly, in my office, we summarized a paper from the Philadelphia Fed that came out in July that talked about how alternative lenders look at alternative data sources to find invisible prime borrowers, in the words of the Philadelphia Fed, that are borrowers that from the uncreditworthy population that in fact can be provided with that are good credit and can be provided with a loan and provide assurance to the lender that they'll pay it back. So there's a lot of opportunity here, and I'm interested in learning some more. So why don't we dive in? Keren, we'll start with you if you could, and just describe, I've had the pleasure of chatting with you before, and also hearing your conversation with CIBC at the Women in Finance Summit in Toronto. I really enjoyed listening to that presentation. But talk a bit about the value that you're, as I recall, a B2B business. You actually, you provide services to banks and credit unions. What's the value you deliver to those customers, and what does that empower them to deliver to their customers?
Okay, well, first off, thank you for all of those kind words. Everything you say about the industry is so inspiring, Senator Deacon. I'm always enthused to see how many people are looking to the best ways to collaborate to bring our ecosystem forward. So thank you for that. What Boston Insights is doing, the problem we are solving for our customers, which are banks, credit unions, and private lenders, is that we want to give them the latest in technology. We want to give them the weight they have as a financial services provider that's operating in a regulated environment, and give them the latest as if they were CEOs of tech companies, the way some of them are saying they really should be, not CEOs of financial product companies, but tech companies. The way we do that is that we end the madness of gathering information on their business customers when they need it. So every time they need it, they go and gather it manually. And there is just no reason it has to be that way. And there hasn't been a reason it had to be that way for almost half a decade. What we've done is we've given them real-time access to the financial and commerce and banking information they need on demand the instant they need it, so they can decision things in real time. And that's how they get the best of both worlds. And what we've seen is that when you add this technical layer onto a traditional lending product, you can get rid of the most expensive cost, which is the hiring very expensive talent to do manual labor like calculating financials. So we've seen that you can decision and service loans 80% faster. Imagine what you could do if you're at a bank right now operating in a traditional lending model. Imagine how much you could really achieve your mandate of being the relationship manager if most of your time was devoted to just that. So that's
I love that. And I got to tell you that I've spoken to entrepreneurs who are looking for lending solutions during these COVID times that have had a response from their bank that said, okay, well, can't do it now, but next year when you get your updated audited financial statements, we'll relook at your situation. And that, that just doesn't, there is an alternative, and you're demonstrating that. So thanks, Keren. Simon, nice to meet you and get a chance to learn about funding options, your business in the United Kingdom. Now, similar space, but my understanding is you're B2C. You go right to the borrower themselves and help them find the best financial institution to work through. Can you go a little bit through how that model works and the value that you deliver to your customers?
Yeah, absolutely. So, I mean, we consider ourselves still to be B2B. So maybe it's just an acronym thing between the UK and Canada.
No, my mistake. So let me learn.
It's all good. It's all good. So it's SME Finance. So we are Europe's leading marketplace for SME Finance. Effectively, what we do is we give businesses who are seeking finance access to a holistic view of their funding options across the marketplace in real time. And we do that through a number of different innovations, one of which I know we're going to be talking about today, which is open banking. So we have access to digital bank transaction information. We are integrated with a very large panel of alternative lenders, but not just alternative lenders, also challenger banks and banks. They're integrated into our platform. Effectively, we have lender scorecards for every product offering for each lender. And we use a combination of AI, data analytics, and various different smarts that sit within our platform to triage and filter a business's requirements and then present them with their funding options.
That's amazing. So what you're doing is you're sourcing the perfect client for the lender's portfolio requirements.
I couldn't have said it better myself. Yes, exactly what we're doing. And it's been an interesting journey for us, because in a way we've actually had to mimic a lot of, in fact, probably improve on a lot of the capabilities that the lenders themselves would need if they were dealing with these business customers independently, if those business customers went to them directly. Pretty much the only capability that we don't delve into is actually underwriting the deal itself. So it's all about presenting the right kind of opportunities to the right lenders at the right time, so that we can facilitate, in as many instances as possible, real-time financing or real-time lending.
That's a really cool model, and I can see you're actually the bank's overall marketing department would be very, very interested in using a service like this as a way to acquire customers, rather than generally going after them in general communications awareness. Simon, so speak a little bit, if you could, just about how open banking, how long have you been around for? How has the open banking regime in the UK worked for you? How's it helped a seed stage company that is, still in the accelerating part of clearly you're getting some great traction. Give us some sense of that. But how has open banking and the regime in the UK helped you, or not, as you've moved ahead?
No, absolutely. So interestingly enough, we've actually been around since 2012, and the company's been on a very, very intriguing journey. I think we came to the market with a tech proposition that the market wasn't ready for. And then maybe I think we moved away from maybe that tech proposition, and then came back more recently towards the tech and the data-led business model that the market is now ready for. In terms of open banking itself, so we started championing open banking last year, and we've embedded that seamlessly into our customer journey. So we have a dynamic customer journey that deals with multi-product all through the same journey. And the way a customer can effectively give us access to their bank transaction information is just an incredibly fluid process. The take up, maybe just to give the audience a flavor of how well adopted it is in the UK. So when we first built it into our journey, we had a number of naysayers within the business itself that thought there's no way this is going to get adopted. It's too new. Customers aren't going to trust it. And actually, straight off the bat, we had 25% of customers who were fully willing to give us access to their bank transaction information. I think probably the same as in Canada and pretty much any economy globally, the digitization process has been vastly accelerated by COVID. There's no two ways about it. And for us, that's been, I think, very, very positive. And I think that has aided in general with open banking. But open banking's been around for a good few years in the UK. Obviously, the rest of Europe has open banking, or I'm sure large parts, maybe not all of Europe, has open banking at the moment. And we see open banking as a critical enabler. The more impetus we can get through something like open banking, the more we can develop on the success and maybe some of the benefits that we see that come with it in practice. From our perspective, the better. And prospectively, when we're even looking at potential markets for international expansion, having something like open banking already live in that market, it actually tells us something about the dynamics of the market, maybe the level of maturity and the readiness for the kind of fintech offerings that Keren and myself bring to market.
Fantastic, and I can see that the certainty is really crucial. And don't worry, it takes lots of great companies a while to find their perfect place. And Shopify started as a snowboard company, so there you go. There's time yet. Keren, can you speak about it from the Canadian perspective and the fact that we don't have an open banking regime? We had a lot of uncertainty up until quite recently when the finance minister took the time, which I'm amazed, in her first 2 months to prioritize our move towards renewing the open banking consultations. So speak about it a bit from your standpoint as somebody who's bootstrapped a company along.
Certainly. Well, I'm going to echo a lot of what Simon just said, and we we as a Canadian company did not have the same benefit. But as a result, what we did have is an ecosystem that's watching open banking happen elsewhere. And on the one hand, not necessarily wanting to adopt it because of the fear that goes along with what has been a moated financial services industry up until now. But on the other hand, in private calls with financial institutions, they certainly would like to gain the benefits of it. So as a company that started in 2017, even then, when we said you need to digitize the process of lending, we would get one of two answers. One would say we already have, and we all know that that's not true. They usually meant that they had digitized a form, not the gathering of the data itself in the form. It's just you don't have to fill it out on paper anymore, you get to type now. Or the second answer we got was, digitization is important. It's not a top 3 strategy. So let's talk again in 6 months. And what happened in March for everybody is that you could no longer talk about digitization. You either had or had not digitized. So you either can or cannot process a loan. You either are a broker that can send an SMB or an SME to a bank, or you cannot. And I will tell you that there were banks who said, we absolutely see the need for accounting information in real time. But I'm going to be honest with you. What we're doing right now is ordering laptops from Costco. That was the level, that was the status that banks were at in March. That's the truth. And I think what open banking has done has led to open conversation. We now have, if we can show that there are benefits for all the players, because the question is, how is this going to benefit a fintech? I'd love to reframe it to, how is it there are 3 people or 3 organization types at this table? There's the banks and the existing lenders, there's the fintechs who are bringing the innovation, and then there's the end customer. And what we need to do is come up with solutions that benefit all 3. And that's how we move the things forward. So I'm sure the bankers were screaming for laptops before March. I was screaming for digitization in 2010. What we need to do is illustrate that the openness of the data does not actually mean the financial institution has to relinquish control. It actually can mean they can be more powerful if they look to expand the pie to get the latest and greatest in technology that comes from fintechs.
I love that analogy, and the pie can grow, and that's what we've got to be constantly looking at. How do we deliver greater value to customers? And if we deliver greater value to customers through partnerships, everybody in that partnership will benefit. So I'm with you entirely. But what's interesting to me is that you've just found a way to work through this challenging. It's COVID that's actually made the big difference, because what it did is it forced a change that was being pushed off the list of priorities based on whatever internal reasoning. So talk a little bit about COVID, because there's estimates we've digitized at 6 to 10 years worth of digitization in the last 6 to 10, 8 months. Talk about that and how that's changing the trajectory for your business.
So we've doubled our revenues and we're on track to triple them in the next 6 months. And what we're seeing, what we've sorted out, and it's thanks to the incredible team at Boss Insights, it's a whole bunch of people working overtime, 18 hours a day since March, because what we saw was the inevitable truth. Capital is a top 3 need by businesses. And it's never going to be more important than when you have to shut down the economy to deal with the health crisis. So we wrote email after email in Canada to politicians to say, this is how lending happens now, and lenders will not be able to keep up. What's starting to happen is that people are waking up, and we are having something like 10 to 15 meetings a week, every single week, from lenders who are looking at ways to adopt. It is completely unprecedented. And while you don't want a pandemic to be the catalyst that makes that happen, what we chose to do was to say, we are going to work with financial institutions. You can be somebody dealing with 30 businesses, and you can be somebody dealing with hundreds of thousands. It does not matter to us. We created a model that allowed people to adopt real-time data in 1 day, not even 1 day. They fill out a form and they have access to it. So there should be no reason, if they're interested in having the latest in technology, that they hold off. They don't have to code anything. They don't have to adopt anything. They don't have to release any resources. They simply have to have an interest in lending in a modern way. And that's how we've been making it through. We also we recognize that we are lucky. We're in a Canadian ecosystem that funds their seed stage companies. And so we offered free technology to any lender that was going to give finances to new business customers. And the ecosystem was listening. So that really acted as a catalyst point for us.
I love that story, and I love that the digitization obviously it's been crucial through COVID. So it's great to see that there's been a response in the marketplace from the banks. Simon, in the UK, I don't know all the details about how things unfolded, but I know in Canada we did not, our government did not choose to include fintech lenders or alternative lenders in our COVID relief programming. I'm hoping that might change for our COVID recovery programming. But what was the case in the United States? Sorry, in the United Kingdom, because you're dealing with, you said fintech lenders, you're dealing with challenger banks and with some of the incumbent banks. So how did that work? How did COVID affect your business?
Yeah, so exactly as you point out, our lender partners effectively cover the full spread of lender, the lender demographic, I guess. So what unfolded in the UK, reasonably similar, I think, to Canada, and it was really interesting if you took a step back, back in March, February this year, and looked at the ways, and obviously April as well, but looked at how each economy and each government, took its decisions and went about trying to tackle the inevitable huge challenge. In short, in the UK, the immediate reaction of the government was to go to the big banks. And essentially, the big banks had an immediate in to the government schemes. So I don't want to go into too much detail because that would be a fairly long conversation. The major advantage that the incumbent banks still have, and this hasn't been addressed, notwithstanding everything we've seen over the last 6 to 8 months, is cheap access to funding or access to cheap liquidity through the Bank of England, what we call the term funding scheme in the UK, which is a fundamental imbalance between lender types. Yep. And it meant, for example, that one of the schemes that the government put in place, something called the bounce back loan scheme, none of the alternative lenders could actually participate because the set interest rate was 2.5%. And these lenders are borrowing at way more than 2.5% because they don't have access to the term funding scheme. Only the incumbent banks and some of the newer banks could participate. So it just gives you an idea of maybe, how much of a non-level or unlevel, whatever the right word is, playing field it was.
Because the alternative lenders are borrowing at a retail rate versus a wholesale rate, basically.
Exactly right. Yeah, exactly right. And it's, for somebody like us, and Keren used the word ecosystem, and that's what we have. So if you look at sort of the fintech world, we are an ecosystem. So there is a need for every player in the ecosystem. What actually unfolded over time is some of the bigger, so at the outset, some of the bigger alternative lenders, they had to apply for entry into the coronavirus business interruption loan scheme. And they eventually, after weeks of sort of not campaigning, but the application, they got into these schemes. And then fast forward 5 to 6 months, they've been some of the best distributors of finance into the economy that there are, right? So they've overtaken and outperformed a number of the other banks that were automatically on the program. For me, it's really difficult because, going back to the global financial crisis of 2007, 2008, we didn't fix. There was a lot said about the UK fintech scene and how good it was, and it was sort of world leading, et cetera, up there with others. But then you had a pandemic, and the immediate reaction was to sort of forget about those guys. We're going here. Our immediate reaction is let's go with the banks. I can sympathize with the government and any government because I think the challenge you have managing for all sectors of the economy, managing for all people is just, that's an enormous challenge. So I can see why it happened. What needed to happen though is you needed everybody around the table, at least for the consultation, get all the ideas on the table. And, we saw it in the US, for example, there was I'm not au fait with the specific details, but the scheme that they used eventually to distribute loans quickly into the economy involved more than 3,000 individual lenders, which is just an incredible response. And I think the number deployed in a week was stratospheric. In the UK, we were still scrabbling around trying to work out who's in and who's out. So we had a good period of 2 months where nobody knew which way the market's going to go. Should we write loans? Shouldn't we write loans? Which sectors are safe? Which ones are too risky to go into? It was, in all honesty, it was absolute chaos.
And that uncertainty exacerbates the problem. And I think that would have been really challenging. So
exactly. And the problem, so I guess the exacerbation of the problem was effectively it's businesses who were completely disrupted. They didn't know which way to turn, and they had a vital need for finance, and that's a key role that we can help with, and that's a key role that the alternative finances as well can help with.
Thanks for that, Simon. Keren, let's look globally now, because I'm a big believer that Canada's stable banking system continues to have a great global reputation. That we made it through the last financial crisis without a whole lot of major challenges, and that's to our credit and to the credit of our financial system. So I look to an organization like yours and say, how can you help our banks to become more competitive globally and to grow more effectively globally? How can an organization like yours help in that challenge?
Okay. I'm not sure which incredible point to start with first, from what you just said here, and Simon, what you just said before about the $659 billion that the US put into the market in 2 months. Can anyone even understand? Can't feel what $1 billion one day, right? But not today. But my head goes immediately to what you said, Senator Deacon, on the Women in Finance panel. We need to stop worrying about creating a strong Canadian landscape that has protective barriers that are artificial, that in a globalized economy, and we need to start making a globally competitive financial services ecosystem here. I'm going to say something because you set the stage there. You invite other people to say statements that maybe can entice people to step in on here. We're not competing with each other. We're collaborating with each other. Right? We have 5 big banks. We have a couple hundred financial institutions in the country. We're not each other's competition. The competition is coming from abroad. Yep. We need to start to think about how we can help each other. BOSS Insights, BOSS stands for back office software systems. That's what we are. We are a data collector. It is as sexy as that. We are going to make it possible for you to never have to chase a customer for financials or for cash flow information ever again. If you want to run your payments, it helps to know when your business customers are getting dollars in, right? If you want to lend $50,000 or $5 million, it helps to know where they stand, right? That's all we're doing. And we're looking for people to collaborate with because they have picked up the enormous regulatory burden of running a regulated financial services company. We're not doing that. So we're not looking to run loans. We're not looking to have deposits like other lenders might. We just want to collaborate with you. There were many schemes put out there over 2020, and it's really easy to call out what was done wrong. There wasn't a perfect one, but what I really liked about the US scheme was that it said to people, it said to businesses, which are the economic engine of the future, that if you continue to employ people, that's when you get your loan, and part of it will be a grant. We didn't do that in Canada. We offered companies $40,000, $30,000 will be repayable at 0%, and $10,000 you can keep if you repay it after a certain time. That doesn't incentivize people to keep employees on the books. And I think that's a departure for the traditional way that Canada funds their businesses, because it's always about keeping people employed and growing our ecosystem. There was a company, a little baby company called Amazon, and they sold books. That's all they did. But now Amazon, the minority of their revenue is in books. The majority of their revenue is coming from letting other people sell on that infrastructure. And that's what we have to do in Canada to answer your call, Senator Deacon. We have to think about how we get all the fintechs to sell their offerings within our banks so that we become globally competitive, just like Amazon did. I don't think it's a surprise or a coincidence that Amazon is in lending. Our Canadian banks can do the same thing. They are incredibly strong. So
Love that. Love that, Keren. Absolutely. Simon, just if we could think about some advice you could give to Canadian startups as we move towards an open banking regime in this country, and what's gone right in the UK, what's gone wrong? What are the where should our focus be as we try and move that needle ahead?
That is a great question. So for me, areas of focus. I mean, Keren's just sort of outlined. I love the points that she was just making there. And if you know what BOSS stands for in BOSS Insights, data is key, absolutely key. We see, and I certainly see, data as being arguably the single, having access to data digitally is arguably the single most empowering thing that somebody in our industry or in our ecosystem and sector can possibly have. In terms of what went right, I guess we were early adopters on the global scheme of open banking. So that's a good thing. So we've got that leadership, if you like. We've got some of that experience under our belt. So versus maybe some of our, some of the other international economies, we're there. We've sort of done it. We've now got the concept, so we're building on it now. We've got the concept of open finance coming. We've got what people are now coining open accounting, so access to your management accounts, again, digitally, which is another facet of the lending process. Anybody underwriting a loan of a particular value wants to also see your management accounts. So in terms of advice, choose your sector or your specialty wisely, because I think people need to understand what's happening with digitization. And the companies that have thrived most are those that are involved in data in one way, shape, or form. Actually, it's open banking companies. So we're partnered with a company in the UK called AccountScore, and there's many, many others, TrueLayer, so on and so forth. These companies are flying, absolutely flying. Same, the ones that give you connectivity again into your management accounts. There is always opportunity when you're in a situation of an adverse situation. And it's that thing we love about businesses. We work with them day in, day out. It's that entrepreneurial spirit. It's the agility. It's the sheer resilience that you see within these companies that for me is truly inspiring. And some of our peers in the marketplace are equally as inspiring to us. We are the leaders in what we do, but we look around us and we're surrounded by some incredible talent. And we don't just look in the UK, we're also in the Netherlands, but we're looking to Canada, to the US, to Australia. Some amazing things happening. And I completely agree with the Keren's points around how do you improve competitiveness in Canada. Absolutely, collaboration and working together to the greater benefit is critical.
Love it. So I'm going to go back to Keren in a second, but Simon, also focus in on customer trust is critical to you. Trust of the banks and the financial institutions and alternative lenders that you work with, and trust of the customers who come through your portal, through your platform to get a loan. So speak about the importance in terms of the regulatory controls there. You're a data manager. You're not, you have no fiscal responsibilities. You're a data manager, but speak about the regulatory side and how that, because you as much as anybody want to protect the customer, because if you don't, and the two sides of your market, if you don't, your business evaporates. Yeah, so what do you see as being the most important things to make sure that is the case? Because if you have competitors out there that are not as diligent as you, that undermines your business as well. So what are just a couple of points of advice before I hand it back to Keren and then start to wrap up?
Yeah, absolutely. So try and keep it very succinct. So, I mean, GDPR, clearly everybody's aware of what GDPR is. We take that incredibly seriously. To your point there, we have seen certain inconsistencies across the sector where maybe some of our peers have been, let's just say, less than, you know, above the water in terms of how they should behave. And you're dead right, that does undermine also what we do. Security, data protection for us, they're absolutely at the heart of what we do. So as you say, customer trust is imperative. From an open banking perspective, for us, that is already an advance in terms of security, because the bank transaction information that we provide to prospective lenders, you can't tamper with that. So gone are the days when you would be faxing through or sending through via email 67 pages of your bank statements with things crossed out, or maybe somebody's photocopying it 12 times with, you know, bits blanking stuff out. Anyway, I'm going on a bit. So from a security perspective, something like open banking, that digital access, it's super secure. It's untamperable. So for us, that's a big advance. And we're going to keep pushing the boundaries of our capabilities to ensure that we can both provide protection for the customer, but also protection for our lender partners, which is also, you know, very, very important. We like to keep the whole ecosystem happy, safe, and secure.
That's great. Thank you, Simon. Keren, can you speak to that a little bit from your end?
Oh, absolutely. So I'm gonna surprise everyone by saying I absolutely agree with Simon yet again. And what I mean by that is when you're offering accounting data, which is what we're doing, there were already providers out there giving banking transactional data. We're giving access to QuickBooks and FreshBooks and NetSuite and whatnot for all the traditional lenders. And then for all the cash flow lenders, you can have Square and ChargeBee and Stripe and so on and so forth, that they're not locked into one lending model. That's how we're helping the lenders. But there is no adoption without having a bank level secure type of platform. There is a in-depth security questionnaire. There is one question they ask if you meet a certain standard. If you do, you're adopted quickly. And if you don't, you go through a much more thorough review. So that's how we're doing it. To the customers, who are the most important party at the table, that often get the least voice at the table, we're giving them what they've never had before, which is transparency, insight into the process, an understanding of what products they need. I cannot think of another industry that expects the customer to know exactly what they need and when they need it and how to ask for it. It should not be that way. It should be proactively presented to them based on their own information. And as a result, the customer should have access to that information. The financial institution should have access to that information. The technology provider should too. One question you didn't ask, I hope it's okay if I can step in and answer, is that by insisting that before we collaborate, that we identify how we're going to be using this data, these insights, we force every player at the table to identify what their true goals are. And there we have a healthy ecosystem. So when Boss Insights is at the table and the bank says to us, exactly how will you be utilizing this data that you're allowing us to capture? We say to improve our system and to give you better insights on your customers. But we are never going to proactively approach your customers, and we don't necessarily need to even know who they are. We don't need to know who's borrowing. We just need to know what they look like demographically and how to best service them. The bank has to say the same thing and the customer has to say the same thing. And then you have an open ecosystem. So that's the challenge that we hope everybody is ready to face, as we have to say what our intentions are in order to meet standards.
That's absolutely a great way to end things, Keren, because that's what I mean, we've got to get to how do we make things better for each other, and how do we better serve customers, and what's each of our role in this. But the ultimate thing is, how do we get more small businesses able to access the credit, especially after their balance sheets have just been blown up by COVID? We're going to have to be very creative in how we support their rebirth, and the rebirth of entrepreneurs who have to rebuild them, you know, their business opportunities in whatever way they can post COVID. So For me, this has been a really interesting session. Keren, I was delighted to learn what Boss Insights stood for. I just thought it was you, the boss. That's why they had Boss Insights. But back office software systems, I love that. Simon, really enjoyed learning about funding options and the creative model that you've created and found after a few years of pivoting in different directions. I mean, that's the entrepreneurial journey. So thanks to both of you. And Michelle, I'm going to hand it back to you to help us wrap up, but thank you.
Yeah, thank you everyone. That was such a great session. I learned so much and just so hopeful for all of the advantages, Simon, that you've been able to capture with open banking and a clear path forward for your organization. And I think my last quick question to both of you in a couple words, what do you see as the advantage for open banking, Keren, for your organization to go from seed and beyond? And Simon, just as you're at a seed level, but growing exponentially, what do you foresee growth of read-write access potentially growing for your organization? Keren, maybe we could start with you.
In 2 words, delighting customers. The opportunity with real-time data is to be able to do exactly what was just asked for on this panel. We don't need to look at lending on assets. We can lend on merit. Do you have real-time sales coming in? We can lend to you instantaneously. Let's put the challenge in front of ourselves to delight customers.
I love that. Simon?
Like that. I thought you were actually going to do it in 2 words, Keren.
Oh.
I may try. I'm going to say added value.
Love that.
Yeah, I think that's just so powerful because I believe open banking is to what Senator Deacon has spoken. This is consumer directed finance. As a consumer, we're putting the power back in your hands so that you get access to the services at the right price with all of the insights to make the right decision. And I'm so thankful for all of you to join OBIC's Open Banking Insight series today and really just sharing your insights on what open banking has and can do for each of your businesses. So thank you, Senator Deacon, Keren, and Simon for joining us today.
Thank you very much, Michelle.
Thank you. That was great.